everybody, my name is Michael DeJoy and welcome to the Dash Trader Newsroom. As summer is coming to an end, will market volatility start to heat up? So let's take a look at this and see what's going to happen in the next couple of weeks. Let's jump right in. As you guys know, my name is Michael DeJoy. I'm the Director of Education here at Dash Trader, and I'm a licensed professional. And let's jump right in. We got the ADP number not too long ago, and it was worse than expected. 177,000 fewer new jobs, which is way fewer than expected. That was down from 324,000 reported in July. That was the estimate that we were expecting. We were expecting 195,000, which is less than 324, but way more than 177. Now, this indicates that the economy might be cooling off. Why is the stock market up on the news? Well, good news is bad news. If the economy is slowing down, then the rationale is that maybe the Fed won't be so aggressive in raising rates, and that the Fed won't raise rates, as they are expected to do at the next meeting. Now, it's pretty much factored in that we are expecting a quarter basis point rate hike come September's meeting. But could it be a half a basis point? That's kind of what everybody is worried about. Is it a bigger than expected rate hike that could be coming? Now, if you look at this chart of the ADP number, you can see we had a really smash up beginning of summer number. So here is the July number with 177,000 new jobs. 171,000 new jobs, which were reported in July for June. And then here's the June number, which was for May, which was 455,000 new jobs. Now, remember, there is some disparity with these numbers. They get revised up, they get revised down. The ADP number is a much faster number, and it kind of gives some color to the non-farm payroll number, which comes out later, about 3 weeks from now for the same set of data. But non-farm is kind of like the official number, whereas the ADP is kind of giving us color to what the non-farm number is going to be. So let's just jump right in and go to the next item on our. All right, so let's talk a little bit about the Bank of England. We have more bad news from the Bank of England. The Bank of England can't seem to catch a break here. They've had one bad news item after another. Basically, the bond purchase that they did back in 2008, 2009 is going to require the UK Treasury to pay another 150 billion more pounds, which comes out to be about $189 billion to backstop this loan purchase, this bad asset purchase that they did back in the financial crisis. So they're continuing to backstop this 150 billion pound loan that they gave to companies back in the financial crisis. Now, this is all happening while the UK continues to sink into recession. UK has been suffering some really bad inflation. And, what does this mean for the world economy? I mean, if the UK, one of the major G5 companies, G7 countries, is having this kind of problem, they are getting hit with this at the worst possible time because the world economy is kind of slowing down as the Federal Reserve continues to raise rates. You have the UK backstopping this old loan, and we're just going to see how this progresses in the near term. But certainly this does not bode well for the world economy. And let's take a look at the next slide, and you'll see why. So, from a technical analysis perspective, we have a double top occurring on the monthly chart. Now, most traders don't look at monthly charts because it's kind of a little bit beyond the regular trading time frame. But this is a chart of the S&P on Dash Trader that shows the monthly chart. This was the high established at the end of 2022. Then 2023, we pretty much sold off all year. So here is the 2022, end of 2022. We sold off in the beginning of 2023, all of 2022 pretty much, and then obviously we recouped quite a bit since the beginning of 2023, right? So this little run up here was the recoup in 2023. Now we have a top and a double top, which now we have a reversal bar after being up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months near the prior high. So we have a double top and a bearish reversal bar pattern on the monthly chart, which means that we might be in for some market volatility. When you combine that with things like the Bank of England having to lay out another 150 billion pounds, and you go into that September is when kids go back to school, and we've kind of been in the refrigerator of the summer doldrums for the last 2 to 3 months, kind of living in la la land. When we come back to reality and the kids go back to school, the picture of the market might not be quite so rosy as it was. Now, that does not mean that the market has to go down. There certainly is room to the prior top, right? So we do have room up here to 480, but this could be a sign that we might have some more volatile markets in the near term. Now, generally speaking, the first 2 weeks of September is statistically the most bearish month of the year. And again, usually the first 2 weeks of September don't have a lot of activity. It's still back to school time for kids. And those back to school numbers are really, really important for some of the retailers and such. So we still have a little bit of time. And again, until the market does actually start going down and until the volatility numbers start picking up, you never start trading. You trade what's currently happening in the market. You don't trade, what you think is going to happen. But certainly the charts are lining up that we might be at a double top situation with a possible monthly reversal. Now let's jump to the next slide and go to our dash trader for some market analysis. All right, so here we have my dash trader. So I'm going to just bring up my my daily chart. So this is my monthly chart on the S&P, because today, right now, is actually the absolute close of the month. This is, it's 8:31 at 4 p.m. So the monthly charts are not going to change, right? So if we're going to take a look at our monthly charts, they're not going to change at this point. Let's go to, let's change this to 2019. Let's do that. 2019. And we're going to look at our monthly chart, and let's hit OK. All right, so here is our monthly chart, 2019. This candlestick bar that we have here is called a hanging man. So a hanging man is a bearish pattern. Generally speaking, you got a couple of 1, 2, 3, 4, 5 months up and a hanging man at a prior high on the monthly. This does not happen very often. This is not a common pattern, right? So even if we, look back, this was the tremendous run post-pandemic. That was the pandemic sell-off. We rallied up. We made a new high. Let's take a look at the tech index. So the tech index, you have a super long hanging man and 1, 2, 3, 4, 5, 6, 7 bars up. So we have 7 bars up near resistance. Doesn't mean the market has to reverse, but we have our first red bar after 5 green bars. This is the biggest bar since the rally started about 7 months ago. So we have a pretty big volume bar, even though it's August, and generally August is a lower volume month. Now, certainly we could make another bar up. Doesn't mean that we have to sell off now, but we are at a point where the market could potentially sell off, and there is a lot of clear air to the downside. Let's take a look at our daily chart. So here is our daily chart on the NASDAQ. We did put in 3 bars up. We are kind of at a double top, coming close to a double top on the daily chart as well. So we have 2 time frames in agreement. It's not the tippy top because there is another prior top that's just behind that. But I want to bring up NVDA. So NVIDIA is really important because NVIDIA is the stock, and I'm going to go to data config here. Config my data to 2019, go to the monthly, and Bang. Look at NVIDIA. I mean, if that's not the picture of a parabolic stock, I don't know what is. I mean, NVIDIA came back, retouched 125, and then blasted off like it was nobody's business. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 months up. If that's not the setup for a mean reversion trade, now certainly I wouldn't want to be the first guy to short this stock, but I would say that this is a stock that's setting up for a potential reversal. Let's take a look at AI. AI is a not so well-known AI company. It's a much smaller company, but certainly MSFT. Microsoft, double top, long topping wick, already on a pullback. Let's take a look at Apple, AAPL. Big hanging man pattern, but in the context of a big monthly uptrend. Not a double top, took out the prior high, so that's not so bearish, but certainly that is a pretty ugly bar on Apple. Let's take a look at Goog. Goog as well, big move up, secondary move up, running into prior resistance, and certainly looks like Goog has a little bit more of running space to do, better than the other ones that we just looked at. Let's look at Meta. I don't know. That looks like a reversal pattern to me. I mean, here was the all-time highs on Meta, which was Facebook. You now have 1, 2, 3, 4, 5, 6, 7, 8, 9 bars up, reversal bar at prior resistance. Let's take a look at oil, USO, or let's see, USO. Oil, the opposite, right? So oil is potentially a reason why this was the big crash during the pandemic. Remember when oil got basically to zero? But needless to say, oil has recovered quite a bit. Oil has kind of a bull pennant formation. A bull pennant is a kind of bullish formation. Price is popping up. Now, oil is important because oil is an indicator of inflation. When oil prices go up, that means that inflation for all other household goods and products will probably go up as well, because everything requires oil to get to where its final destination is. So that chocolate bar in the candy store, or the bottle of soda that you look to buy in the candy store at the corner, that gets there by trucks, and trucks need oil. Speaking of trucks, Tesla, right? Tesla stock certainly has that same kind of, I said Tesla because of Tesla has its Cybertruck, which I think one of them was abandoned along the side of the road. Tesla's got a head and shoulders pattern, okay? And certainly it's kind of retouched the neckline where it broke from. There's the neckline break. So Tesla also has a pretty bearish chart, and this was one of the dolls of the big rally post-pandemic. So certainly we see a lot of bearishness developing on our long-term charts. Not bearish yet, but it's kind of like the telltale signs of potential volatility. So here is the VXX. Well, let's do the VIX first. So volatility has not started to spike yet. So we certainly had a little spike up, but it's not anywhere near normal volatility levels. So until volatility starts to spike, we certainly do not see any significant volatility yet. And for that reason, we still trade whatever the current present trend is. But I do want to point out that there is a lot of potential volatility shaping up or setting up on the daily charts. So on the monthly charts, and certainly that will pass down to the weekly charts and then subsequently to the daily charts once some key issues start to reverse. And really, the stock that's been holding up the entire market and the one that you need to watch is NVIDIA, because NVIDIA, it has been the darling of the AI space, and certainly NVIDIA being a leader in AI, with Microsoft MSFT, kind of a secondary leader, okay? And then there's some other, big players as well, but certainly Microsoft and NVIDIA have been at the forefront. Apple, kind of less so. Apple still looking kind of good. So goes Apple, so goes the market. And another thing that you might want to do is if you go to data config, you can go to your weekly chart and take a look at the weeklies. So here is Apple. We made a big sell-off on Apple. Now the key will be is to watch if Apple puts in a new high or a lower high on the weekly. When we look at NVDA, we put in a high, we dipped down, earnings came out, some volatility happened. But one other thing I don't like about NVIDIA is you see big volume coming in at the end of a move. So usually you want to see big volume at the beginning of the move and big volume at the end of the move. Those are signals of reversals, potential reversals. So these are things to just keep an eye on, that you saw a very, very big spike in volume, not this week, but last week in NVIDIA. That might not be a good tell for what the future of NVIDIA is. So definitely keep an eye on that one. And let's jump back. All right. So we're done with our market analysis. There's a couple of things I'd like to mention just going forward. We will be having another trading competition soon, so stay tuned for that. Also, I am starting 15-minute free consultations with Dash Trader. If you go to the Learn to Day Trading site and stay tuned at our newsletter, we will be sending out an opportunity for you to get a 15-minute free consultation with me on how to, utilize your Dash Trader as the summer cools down, the stock market starts to heat up, and I'd like you to join me for a free consultation opportunity. There will be a link in the description for you to take advantage of that. So stay tuned to all things DAS by signing up for our monthly newsletters. Simply fill out the form at dashtrader.com, and certainly subscribe to Dash Trader TV and the Dash Trader Newsroom if you haven't already done so. And remember to follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. That's all for the newsroom this week. Stay tuned, and hope to see you at a 15-minute consultation or in one of our upcoming trading competitions. Trade well, everybody, and be ready for some volatility come September.